Crypto Dog the Rescue here. Welcome to my channel. Today I'm going to be going over how does Bitcoin mining really work. This is really just for everybody who's beginning and trying to come into the cryptocurrency world. I'm with family. I'm in another state right now, and we've having some conversations over the week. And it seems like there's some questions that are, they can't seem to find the answers for because it's very hard to understand this market, and how Bitcoin works or how any mining works when it comes to proof of work. So we're going to get right into it here, and we'll go from there. All right, let's get right into it here. How does Bitcoin mining work? So in order to answer that, I would say simple question, you have to kind of break it down a little bit, unfortunately, to kind of figure out how does it actually mining work. Now, the definition of mining, you got to keep that, you got to kind of disconnect yourself from the traditional definition of what mining is, you get a pickaxe, you go out there and you're looking for, gold or some sort of precious metal, right? So basically what you're doing is you're looking in a hay stack for a needle, right? Or a needle in a stack of needles. It's kind of how it works for with mining as an opposed to that. So let's just get into the, I guess the beginning of Bitcoin, right? So where did Bitcoin come from? Okay, Satoshi Nakamoto obviously was the creator of Bitcoin and cryptocurrency. What he did was he started the first block, okay, a blockchain in Bitcoin, one blockchain. It was called the Genesis block, okay? And with that one block, he started it. Now, transactions go into this block in the blockchain. All these transactions that you're doing on Bitcoin, moving it from one address to another, that is a transaction, it has to be recorded in the blockchain. So therefore, now you have an immutable ledger on the blockchain. Well, in that block is what you're trying to actually compute a certain hexadecimal number for that block. Once you get to that number, it's like a lottery, really. I mean, you're really just playing a lottery. I mean, you can't win unless you play it, right? So there's two functions to mining, and I'm going to try and get into it as best as I can here, but let's go one by one here, okay? So let me go back a little bit, all right? Let's start from after Satoshi, right? Satoshi made the Genesis block, okay? Now somebody has to come up with a hexadecimal number to complete that block, okay, or move on to the next block, okay? So you have to open up a new block for new transactions to go into so it can be recorded per block, you know what I mean, in the blockchain, right? So once you figure out that hexadecimal number, it's like winning the lottery. Okay, you got the number, right? You are then rewarded with new Bitcoin. That's where the new Bitcoin comes from. You're not mining actual Bitcoin. You're mining the blockchain for the transactions and being rewarded with new Bitcoin. So again, the halvening is what the reward is for the new Bitcoin. So you come up with the hexadecimal number, which is very, very hard to come up with, which is why everybody pools in mining. So they're all looking at, they're just basically throwing out numbers of these hexadecimal numbers, and whoever gets the number or closest to it, as far as a calculation goes, it is then rewarded to all the pools, and then the pool basically breaks it up. The last person who actually hits the number gets rewarded the most, and then it gets filtered down based on work inside that block. So it's hard to kind of put to wrap your head around because of that word mining. That's really what I think is what has been deterred from everyone, and obviously the function of cryptocurrency involved with the mining. So Bitcoin's very fundamental. So this is why I'm kind of, going off of Bitcoin real quick here. So let's get down into what it actually is going on here, okay? The Bitcoin reward the miners receive is an incentive which motivates people to assist in the primary purpose of mining, okay? The primary purpose of mining is to support, legitimize, and monitor the Bitcoin network and its blockchain. So again, the first thing that as a miner, you're auditing the blockchain. You're making sure nothing wonky is going on inside the blockchain. What do I mean by something by wonky? Okay, now let's kind of make it analogous with the banks, okay? Chase has a bank, Wells Fargo has a bank. You want to move money from Chase over to Wells Fargo's system. Well, that money it is digital at this point. You know, it's not in physical form, it's digital. You just want to transfer it, right, on through their system to system, okay? That's why you're paying fees, okay? So they have this long number that is basically encrypted your money, and then it's moved over to this other system, which would be Wells Fargo. Well, they both now have these same encrypted numbers. So that can't happen. So when it moves over to Wells Fargo, they have to re-encrypt your money. So Chase over here doesn't have a double of it. You know, that's double money. You know what I mean? You can't have a dollar with the same, serial number on it. That just doesn't work. That's counterfeit. So you can't have double spending in there with two different the same encrypted number in two different banks. It has to be re-encrypted. Okay, so that's the same thing that we're doing in transacting, is when we transact Bitcoin for someone as a miner, we're signing it, we're verifying it, and we're re-encrypting it to go over there. So as the sender of that Bitcoin, you don't have a double of that. You don't have a clone of that. We have to re-encrypt it. So that costs money, but that's a very, very minuscule transfer fee or a transaction fee as opposed to the bank. So that's what the first thing you have to do as far as a miner. That is your initial job to do, is to oversight, be an auditor actually as a miner on there. Now, that's basically, overlooking the thing, and everybody's looking at it. It's not just my computer as a miner. It's not just my miners. It's everyone's miners are looking at this and auditing it. So there can't be any erasing on the, that's why it's immutable. You can't erase anything on the blockchain. You can't add anything unless everybody else has already seen it and basically has confirmed it. So that's why it takes 32 confirmations for you to make your money, or to get your money from one place to the other, because it's going all over the place and everybody's checking it with their miners. So we're doing what the banks are doing, just in a decentralized. It's not going to one place to be converted. You know what I mean? So then you have to pay this central company to do everything for you. We're all doing it as a team here, decentralized and trustless. We're just letting our machines do it based on the calculations and the protocols and codes. So it's trustless, and then we don't need the banks. Nobody's touching it. You know what I mean? Nobody can in that respect. So that's the first thing that you have to do as far as with mining goes, okay? To support, legitimize, and monitor the Bitcoin network. Now, let's get down into it's a duality. There's dual purpose to mining, okay? The effort, okay? So you have to do at least 1 megabyte worth of transaction. Let's just look into Bitcoin here. 1 megabyte worth of transactions on that blockchain. Now, the luck comes involved is when you hit the lottery. Your hexadecimal was the closest to that hash target for the block, okay? I know it's a lot of different, words, but just keep in mind that there's a target number in hexadecimal, 64 digits, okay, as opposed to 10 digits. That's why they use hexadecimals. And now, so it's harder so it's basically you're playing the lottery as a miner, but you're putting all this effort in with your megabytes of transactions. So once someone has actually found the hexadecimal number, so it's not really a computation or a math, it's just they're throwing out numbers. There's constantly numbers, and there's trillions of possibilities per block. That's why it takes so long to actually, get to the hash target and then move on to the next block. Now, again, when you do hit the hash target rate, you are then awarded right now with 6.25 Bitcoin because it halved. Before the halving, it was 13 or 12.5. And then before that half, it was 20. So when Satoshi started his Genesis block in 2009 and someone figured out that hash target, they were awarded 50 Bitcoin at that point. Weren't worth that much back then, but he was awarded 50. And now they're having the reward of new minted Bitcoins once you figure out that hash target rate for that block, okay? So blockchain and the cryptocurrency of Bitcoin has to go together. And it just has to. There is no... and again, one of my other brothers, he didn't understand what the actual cryptocurrency does as opposed to the blockchain. And so I guess I kind of see that he only knows what half the blockchain means. He told me he understood what it means, but if you did, then you'd kind of know what the cryptocurrency is kind of for, I guess, in that respect. But again, there's just a lot of definitions, a lot of things that we use as like mining. We think of mining in that definition, and you kind of have to, disconnect yourself from that. So, keep that in mind when it comes to mining, okay? You have effort and you have luck. That's the only reason why a block gets done, is because somebody figured out that hexadecimal number of 64 digits. And I'll show you an example here and here. So what is a 64-digit hexadecimal? This is what a 64-digit hexadecimal starts with. Normally, a lot of zeros, right? I think it's 8 to 13 zeros is what it starts out with. So you have this hexadecimal number here, and let's go down. I'll show you this little how to win it, right? So the target here really is this long, long number starting with zeros and then ends with EE, right? And the 05 is kind of what they're saying in this quote unquote example is what you need to get close to, okay? So everybody throws out a lottery ticket, right? This guy had a 3, right? Well, the reason it actually was over the target number, you have to be equal to it or lower than it. You can't be over it, okay? So that it's greater than, so you can't be doing that. So this one is considered greater than, so that's disqualified. The D is considered greater than because the D in hexadecimal actually means 13. So again, it's too much. So, and then on the viable one, as you can see on here, it was a 4. Everything else in this number is the same except for that one number. It was the closest to the target, which basically means computationally it can't reach a 5. It's as close as it can get. So it rewards that person with the block. Well, that's why everybody goes into a pool, because it takes trillions and trillions and trillions of nonces, which nonces are basically a number that's used once, which is a hexadecimal number that they try to use like a lottery ticket. It didn't work, it didn't win, so they try to, so they make another lottery ticket. They make another, and keep just making these nonces, you know what I mean, that are actually a fraction of the 264-bit. So once you hit that nonce, boom, you just got rewarded with minted Bitcoin, okay? So the minting and the mining, the definitions, really, again, keep an eye on those. You have to really disconnect it from the traditional definitions of that. So that's really it in a nutshell of how new Bitcoins are minted, okay? And what the actual function of a miner is. Function of the miner is to audit the actual block, okay? The blockchain, the transactions that are coming in. You have to do at least 1 megabyte. Now, I guess the whole caveat on this is, well, what if 2 people come to the same hexadecimal number, right? Happens all the time. Happens all the time. They say, hey, you know what? I came up with the hexadecimal number, and someone else came up with the exact same hexadecimal number at the exact same time. What do? Well, it goes back to the person who put in the most work on that block, okay? So you could have a newcomer coming in as a miner and a guy that's been there for probably weeks mining on that same block, and the newcomer and the old guy got the same one, got the same target number, right? Well, the old guy is going to get the 51%. He's going to get the most money out of this whole pool because he has put in the most work, as opposed to this other guy. He just came in and just lottery ticket, he hit it, right? So that's kind of the way that they're doing it, and no physical, involvement. It's all computated. It already shows that, hey, we already know who's been putting in the most work, so they're going to get the most Bitcoin out of this pool. So again, that's just kind of how it works in a nutshell. It's really hard to explain to people when they're really, really just kind of focused on the mining of it. But again, very hard to explain what mining is if you don't know or how mining works if you don't know the definition of actual Bitcoin mining or cryptocurrency mining. So, keep that in mind when it comes to it. Again, hash targets is really what you're looking for, and it's just a lottery ticket that you're throwing out there in a hexadecimal form, 64-bit hexadecimal form. Very hard to do. Now, normally in a block, a transaction can take up to 2016, right? I'm sorry, not 2016, but it can take thousands of transactions up to, okay? So as everybody's trying to find this lottery number, right, to finish the block or open up a new block, right, these transactions are still coming in the block, right? So it really depends on how fast the hash target can be hit, right? Once that lottery ticket, quote unquote lottery ticket, hits, okay? So we could be doing transactions, hundreds of them, and all of a sudden someone hit the lottery. Well, now that block is done. It only has a couple hundred transactions. It's done. Move on to the next one because it's opened up. We've already got the reward for it. It's done. It gets locked up, and it's immutable at that. It's 100% immutable at that point, and nothing can be moved around, because it's done. It's locked. So that's why, again, it takes, it's 1 in a trillion, 1 in a couple trillion. to hit the lottery ticket. So that's why you normally you have time. So transactions, thousands of transactions can be put into one block before the next block opens up. Again, it's just kind of it really in a nutshell of really how mining works. I hope that really put it into exactly how it actually works involved in this. Hopefully that this comes up pretty quickly and I can kind of show you, on Google. That's the first thing everybody obviously looks at, right? Is what did Bitcoin, or how is Bitcoin mined, or how, what is Bitcoin mining? So if this will open up for me, I can actually show you guys these questions here, and basically the questions that we basically have already answered here, okay? Wow, things have changed on here already just from me opening it up. That's weird to me. So anyway, so when it comes to here, it says, how long does it take to mine one Bitcoin? Okay, so that's one big thing. Everybody thinks that it takes a couple days. No, for one solo miner to mine, right, and actually say hit that lottery ticket, and he's the solo miner on that one Bitcoin or that one block that he's trying to finish, it's going to take him 5 years to do that one, just to find the lottery ticket for that one, because there's 1 in a trillion to find that one lottery ticket to finish the block or open up the new one and receive your reward of newly minted Bitcoins. Okay, that's how the newly minted Bitcoins come in, is when you hit the hash target rate, the block is done, we're moving on to the new block. Okay, so the new block is open, then reward off that one once it's done, and you can lock it up and move on. So again, it takes, for one solo miner, it's going to take them 5 years to do it. So again, that's why everybody pools, right? So you can actually mine it and get to that target hash, and then everybody gets rewarded onto that. So I mine Ethereum, and Ethereum has no supply limit. It's completely open, but they only allow like 2,000 newly minted Ethereum coins a year to come out into play. So it's a lot more than Bitcoin, but I'm always making money on a weekly basis with mine because I'm putting in the work, and the pool luck obviously comes into play, and I'm making my money. So some weeks I'm actually making more money than usual because who knows, I possibly might have hit that hash target in the pool, so I'm getting paid a little bit more than everybody else. So it kind of just works in that way, and they spread the love out in the pools. Obviously, they have to, based on how much work everybody has done in that pool, right? So keep that in mind with the mining of Bitcoin, and what exactly is a Bitcoin, and where did it come from, and how is it used, and where are these minted ones are coming from, right? I hope that it is kind of coming more into a light here in that respect. So I think that's pretty much it. I've covered pretty much everything in a nutshell. Really, when it comes down to it, the difficulty rate is something that I guess we kind of touched on too in our conversations with mining. Now, obviously, the more miners we get, the more blocks are going to be discovered, right? The hash target is going to be discovered faster because there's more miners involved, which makes the difficulty rate higher because there's just so many people, doing it, and they're hitting the target, and then you have to start it. So there's just so much difficulty going on because there's so more people. Well, recently, Bitcoin's mining difficulty sees the largest percentage drop in 9 years. Now, again, why did this happen? Well, China has now dropped all their mining. I mean, they basically are saying cryptocurrency is illegal. So now everybody's dropping their mining, and then they're stopping their mining and moving everything, to different locations and getting them out of these areas, I guess, where it's apparently illegal for cryptocurrency. So China's doing some big moves. I'm telling you, gold, silver, cryptocurrency. They're trying to get away from the US dollar. A lot of people don't believe it, but go look at the stats right now. They're halfway there, okay? So they've been trying for 10 years, and in the last 5 years, they're getting to their goal because they don't share their gold, they don't share their stuff, and they don't want to share their cryptocurrency. That's what they're actually going off of right now. They want it all in-house so they can make up their own, world currency or, country currency or whatever they're doing, and Russia's trying to do the same thing, and they're kind of in cahoots with it. So little tidbit there, but let's get back into mining here. China did obviously stop their mining for the most part dramatically, so that drops the difficulty rate in finding that hash target for the block, so you can be rewarded with newly minted Bitcoin. Hope that all makes sense after all of this. You know, that's really in a nutshell in that one last sentence of how it works. Keep that guys in mind. My name is Crypto Dog to the rescue. Please like, subscribe, hit the bell, comment below. Has no value to you, has great value to me and the dogs I'll be rescuing in the future. Keep up the grind.